All right, welcome back. This is the Something Ventured podcast. I am Kent Lindstrom. I am your host. This is part 2 of my conversation with Jim Scheinman, early executive at Bebo, one of the second most successful social network exit, as we've often said, and currently a successful venture capitalist. My conversation with Jim Scheinman, part 2. Now, you say positive in the world. If you look at, what do you think about this sort of concept? Take self-driving cars. You've invested in this insanely successfully. That self-driving trucks will put one of the top non-college income sources in the country. Will put all those people out of work. And the next stop is, Walmart instead of, they're not going to learn to program Ruby on Rails. Yeah. Nothing you can do about it, I guess. But what do you like?
No, I'm glad you brought it up. It's a really important discussion, and I want to break it, down in a couple of ways. So first of all, we're an investor, a very proud investor, and the first lead investor in a company called Embark, which is the largest independent self-driving trucks company. And they haven't announced yet. They've just closed a very, very big Series B with a great Series B lead investor. Took them a while to figure out that this was the right vision, but we're delighted they finally figured it out. So I know actually a bit about the truck space. Let me give you some data that most people don't know. What Embark is doing is helping long-haul trucking. So they've got a partnership with Ryder and Electrolux, which is a Frigidaire company, and they deliver refrigerators on these self-driving trucks from across the country. It's working. It's amazing. Now, by law, they still have a truck driver in there but he's not doing anything. Right? It's working. So. It's much more efficient and much more capital efficient for the companies involved. The interesting thing is right now, the estimates are anywhere from 250,000 to 1 million long-haul trucking job openings available. It's not a job that people want. It's a really hard job. And, people who are skilled at doing it don't want to be away from the family 5 days a week, right? So this is a situation where technology is actually solving a problem. Now, that's today. At scale, in 5 years, as we think Embark is going to be this wildly successful company, there won't be a need for long-haul trucking jobs at all. So some people will start losing those jobs. The nice thing is that we know that's going to happen. So we have time to transition people. And the beauty of this model is that we're not intending to go into urban trucking. So in other words, if you want to be a truck driver, you could still drive the trucks, or we need you. Right. But do the job you like to do.
And stay close to home.
Yeah, stay close to home. All right. And so this is like one of those places where I think it will work. Now, that's one piece. With that said, I think a lot about this. I have a blog ready to go on this subject. AI and technology in the world has changed. Like, in other words, we're going to be replacing a lot of jobs, whether it's a lawyer, accountant, a truck driver. That's where we're going. And I am a realist. I live in reality. When we started, with Friendster, for example, and certainly at Bebo, we saw this a lot in Europe. People were like, look, don't bring social networking to the world. Shut it down. The kids are spending too much time online now, right? And so you can say that, but the reality is we're not going back.
Right.
Now, you can argue, do we have a better world, a worse world? I'm a realist. I live in reality, and I say, this is going to happen. I'm going to do a couple of things. This is what I can do in this world. One, I could take this technology and the product and try and bring good into the world and try and stop evil or bad stuff from happening. And number two, living as a realist, what do we do about people who are going to lose their jobs, right? And so you have to start thinking about much bigger ideas like, is there a basic income? Do people just get money for being born?
Right.
What an interesting idea. Now you're freed up to do creative work like art, dance, music, other things. There still will be jobs, And by the way, I'm not the only one. There's a lot of people thinking about. There's some great TED Talks from this last TED session and years in the past, and the great books written on this. I don't know where this is going, but I think Silicon Valley needs to be a part of that conversation, and we need to be part of solving these. I don't know if you call them problems, but solving these realities.
Yeah. Mark Andreessen, I think, you hear some of the ideas in Silicon Valley. I don't know how to credit them all, but let's say Mark Andreessen talks about how Silicon Valley destroys a bunch of jobs, but then creates them. So he's like, look, when self-driving cars come along, what are all the Uber drivers going to do? And he's like, but that wasn't a job 3 years ago.
Right.
So we created that job, and maybe autonomous vehicles will destroy it, but that'll happen 5 times. Like something else will be created.
Right. There's been a lot of studies that say, if you look back over the years, that technology has created more jobs, and have destroyed jobs, but have created more jobs. And so then which is true. But then the question is, will that continue to be the case? Maybe. Yeah. And maybe we don't really have a problem, or maybe not, and we have to figure this out. But again, just being part of the conversation, like, I think it was just more of like ignorance. We were not part of that conversation, and we have to be now.
Yeah, I mean, there's certainly the weird dynamic with healthcare where you need to keep a job to have healthcare. Like that certainly there's a lot of people, like you'll meet people who say like, I can't quit my job because of the healthcare, and you're like, that's a $2,000 a month part of your job, but there you go. Like that's a lot of the world.
But if everyone gets free healthcare, then we take care of that problem. How do you pay for that?
But maybe then you go start a company, and I'm not going to solve that problem. Although I've always been intrigued, even having studied economics in college, is why if you look at unemployment rates, they're like 3%, 5%. Like the numbers are always something like that. Like why? Like why does it take 95% of the population to do the work of the world? Like why what if it just took 10%?
Yeah.
Then we had machines to do everything.
Yeah. I mean, maybe one of your listeners, this is a market opportunity. If you believe that there's going to be this shifting and retraining in the job space, okay, well, maybe there's a startup to be done there, right? Or what does the world look like when 70% of us don't have to work? There is no work for us, but we don't have to. Yeah. So what does that create? Like that's probably going to happen. Maybe not in our lifetime, but and so then is that the next generation? So it's probably too early for us to invest in that space, right? But it's not too early for people to start thinking about, well, what does our world look like? One of the things that we actually started looking at is food tech. We don't do a lot in food tech, but there's some really amazing companies that are growing like meat that tastes like the best beef you could buy, Kobe beef or whatever, for in a lab. They don't actually kill animals anymore. We can grow meat that tastes like the best hamburger you've ever had for 99 cents or for pretty cheap, and you don't ever have to grow animals, kill animals, so better for our environment, and it's theoretically healthier for you. So and if we could feed a population of 10 billion or 20 billion, that's interesting, right? It's really incredible.
There's a couple of things I want to ask you about before I let you go. One of the things I enjoy making fun of venture capitalists, and I want to ask what am I to make of? So there's a podcast by a guy named Harry Stebbings. He's just a fun, talented guy, and what he's done is he's created this podcast where he interviews for 20 minutes venture capitalists. And what that has done is it's gotten you hear a whole bunch of venture capitalists in a row, telling their ideas about how they invest. And there's 2 things that I've noted, kind of tongue in cheek and kind of serious. The one thing I note when the venture capitalists come on and talk to him is some of them describe very simple ideas as if they're very complicated. So they'll say, you need to invest in a lot of companies because of course they're not all going to make money, and one of them's going to cover the rest of the companies. And you kind of go, well, that's diversification. Everyone knows that. And the other thing is every other guy who comes on has the exact opposite theory of the previous guy. So, one guy will come on, he'll say, well, the whole thing about seed capital is this. It's you got to get in early, and it's that first check that's going to make all the difference. There's other guys who say, no, the whole thing in seed investing is the optionality. First check doesn't matter. It's the fact that you get to go into the Series B when you're not Series A, Series B when you're not Sequoia. Do you have a philosophy like that, or do they have these philosophies because they have investors who need to hear a philosophy, or what am I hearing here?
The VC industry has changed dramatically over the last 10 years and will continue to change. So Maven Ventures is a micro VC fund, which is, even that definition has changed. Let's say clearly under 100 million, but maybe under 60 million, roughly, and so...
only in Silicon Valley are those numbers called micro.
Right.
But
fair enough. Fair point. Right. Exactly.
Sure.
So when you're in that space, and by the way, there's a lot of micro VCs launching every week, because if you made $1 million at a successful company and you decide you want to become an investor, you're a micro VC.
Right.
So I think
are there a lot of people who are like you who are really building a VC, or are they just rich?
There's not a lot, but there's a lot more VC firms now because of the micro VC market.
You're passionately building, I think, building a seed VC franchise. I feel like there's a lot of people who are like,
I think everyone has this goal to, raise the third fund and fourth fund and fifth fund, but they're not successful at it, and they realize, or they're not good at it, or they don't like it, and so they stop, right? Yep. But it's very noisy. So I think the point was that we have to come up with some kind of differentiated strategy. Mm-hmm. And that's why you hear this stuff, right? Because then, they're going to the same our investors are called LPs, limited partners. Right. They're either large endowments or fund of funds, or high net worth individuals or family offices. They're all seeing all of us, so we have to come up with different stories. That's why you're hearing this stuff. Now, I'll tell you what Mavens is, and it's not because we did this differentiated. It's just simply this is what I like to do. Mm-hmm. So,
which is probably the best reason, by the way.
Yeah, one of the things that I realized as my own personal angel investor is, I was a lot more successful at the companies when I knew what was going on and I knew the market. So, like I say, stick to what I know. I've been a consumer entrepreneur for my whole career. So, why would I start investing in B2B or enterprise or clean tech? I don't know anything about that. I'd have to really learn on your dime as an entrepreneur for. One or two or three companies probably get it wrong, lose all your money, but then eventually maybe I get it right. Yep. It makes it a little more interesting for me if some VCs are like, I'm a generalist because, it's more interesting. I get to see everything. I get it, but I actually think I've been a lot more successful because I stick to what I know. Now, consumer's pretty big though. So I've done fintech, healthcare, self-driving car. It's a broad space, but there's certain themes that come up over. So we're thesis driven, right? So we stick to what we know. We're thesis driven. We're also much more concentrated than almost any other seed or micro VC fund, and that's by design. Again, I personally love working with the startups the first year. Mm-hmm. That's why I do this, right? And so I couldn't do more than 3 or 4 investments on my own a year. And then, my partner Sarah will do, 1, 2, or 3 investments. So together we do about 4 to 6 deals. Yep. Over the life of the fund, we've done 18 companies. And so people look at that and say, that's really concentrated. That's a huge risk early. It is, but that's just our strategy. And it's worked for us. We've returned fund 1 and fund 2 is looking great. So,
which is an incredible accomplishment. I mean,
thank you.
Everyone walks around talking like every VC fund's like a 10x, and that just like Facebook is far more rare than people estimate. I think 10x funds or even returned funds are far more rare than people would imagine.
It is interesting. I mean, our fund 1 right now is a 2013 vintage fund. We have almost a 2x DPI. That's like cash back. If you invested $1 million, you made $1 million. You've got your money back and you doubled your money, right, in just 3 years. We looked at the numbers and there's just very little data from 2013. But like we were talking earlier, if you have anything like a 0.2 or 0.5 DPI, if you've given some cash back, you're in the top 1 percentile. So imagine it's a top 1, 2, or 3 fund. And I think that can happen with concentrated seed funds, because the thing is that these companies can scale very, very quickly. Right. I mean, you see. If you have the right team and you have the right vision worth fighting for, within 3 years, they could be $1 billion company. It's not going to happen all the time, but it certainly can happen. Right. And we're also in it for the long haul. We're very patient. I was a seed investor and came up with the marketing strategy and the name for Zoom, which is a great company. It's will be my biggest exit ever.
Right. Wow.
Love the business, and it's changing lives. I mean, change our life. It's the way we do most of our first initial, meetings through Zoom around the world. We don't have to fly around. We don't have to drive around everywhere. It's companies are using it. It's replacing WebEx, BlueJean, all these guys. And, that company it's going to take a while to get to its very, very massive successful exit. And that's okay. We're very patient when there's great business that's changing the world. But there is also opportunity if you're a seed investor investing in a company and you have a concentrated fund and you know the founders really well, and they've raised a round at a $2 billion valuation, well, you're sitting at a $5 million, valuation 3 years ago.
Right.
We could sell half our holding, return the fund, still have half of it, hold it for the next 5 years.
Right.
So we like this strategy. We like working with the founders really early. And then the other piece of our differentiated strategies, we're very hands-on. I think that's hard to do if you've invested in 15 companies in a year.
Right.
You can't be helpful. And it's hard to do if you don't know the business.
Right.
So if you ask any of our founders, I think you would find the same thing, that they'd say, yeah, the Maven guys were great. They were there from day one for the first year. They were the most helpful investors. That's what we pride ourselves on.
And what are you helping them with? Like which
you name it. Like, as you know, this stuff is hard to do. And and we've learned a lot along the way.
Yeah,
so,
for sure.
With the successes and mostly with the failures. So I help them avoid all the mistakes that we made, and I help them set them on a path for success, right? And we have actually we call it the Maven Startup Kit. We have a list of 10 things we go through. Sometimes they don't need help in certain things, but most of the time they need help in a lot of things. Number one, telling their story. Yeah. Like, I know the vision. I know what they're trying to say, but they're not saying it effectively. Yeah. It's one of the reasons why most of these founders are not getting seed or Series A funding, because they can't articulate their vision worth fighting for to the VCs. Yeah. But I'm really good at that. I know how to help them do that, right? And so we spend a lot of time on their deck and their pitch and the vision. We will personally introduce them to other co-investors that we like to invest with that we think can be helpful to the business. And so our last investment is in the it's an amazing business in the Amazon Go frictionless shopping space. They were struggling to raise a round, and when we led that round, once we put our money in, we closed a deal. The $2 million seed round within 30 days.
That's great,
right? And so that's a huge value add. Now they can go back and focus on their business, right? With great investors who are going to be helpful to them. We're there to coach them on hiring, PR, marketing. Like, what are the milestones you need to hit to raise your Series A, right? What's the path of success for the next year, 2 years, 3 years? We help them with their goal setting. We help them stay focused on what's important. Yeah. We often help them on founder issues. That's almost always comes up.
Mike Maples tells a funny story about seeing pitch decks and stuff, and he talks about how the number of people who show up and he doesn't know what they do, it would shock you. He's like, they show up and they're talking about like how millennials' eating patterns are changing and how they order. He's like, what do you do? Right. He's like, walk in and tell me that you sell a $10 monthly subscription, exactly what it is. Right. And then we'll talk about why people are going to buy that. But he said, I can watch whole presentations. Like, I don't really,
remind me again what you do. Yeah.
Yeah. I mean, they're passionate and all that. So
we blog about this. We give advice to, even if we're not going to invest, we'll just, here's what you should do with your pitch deck. Yeah. And lead with your vision worth fighting. If you don't lead with your vision, you've lost me from slide one. Yeah. If you can capture me with this idea about one day there's going to be robo-taxi, self-driving vehicles, and it's going to save 1 million lives a year and be better for environment, and you're going to love it. I'm like, well, that's kind of creepy and interesting, and wow, I'm engaged. Yeah. That's that could be a really, really big idea. Now I'm listening, and then you can go into the detail of why you and how you're going to do it and how this market's going to grow and what it's going to look like.
And stick to your vision, because you have the thing, Mike Maples also talks about this, but I've seen this too, where you go to the first pitch, you're like, here's my vision, and they go, oh, what about your China mobile thing? Right. And so your next pitch has China and mobile, but that wasn't really your idea. Yeah. And they're like, well, what about your AI? Is there AI? You're like, oh, we got to say there's AI. Just stick to your vision. Yeah. There's a lot of investors, and just wait until you find the investor who's like, yeah, I think that too.
Yeah, that's right.
Because you're not going to change somebody's opinion. If you walk in and go, look, you don't understand how the Philippines, mobile market works, and you didn't have that idea ready, they're probably not going to be convinced. But if you walk into a guy who's like, I know mobile fintech's the future, and you go, mobile fintech's the future, that guy's like, I knew it. You're my guy.
And you also want to have investors who support your vision. Yeah. Right. So, I mean, I never heard, I think it's a great idea, but avoid vision creep. Yeah. Right.
Unless you really believe it. Yeah. But if you're like, well, this is what VCs want to hear, now you're the sales guy, and if you're not a good sales guy,
Right. I think it's dangerous. I think you're right. You have to stick to the vision. I think the challenge is most of the founders, it's actually really hard to articulate your vision worth fighting for in a sentence. Yeah. That takes a long time. We spend a lot of time with our founders on that. Yeah. But when you get it right, it's magical.
Yeah. So there's one last thing I wanted to ask you about. The cryptocurrency. This whole thing in Silicon Valley, there have been all these kind of trends that, AI and drones. Right. I don't know what's going on with those. There's a lunch delivery craze. There really was. Even though people make fun of it, that seemed to be getting funded. Cryptocurrency, just sitting here from the outside, it seems to have a lot of elements of something I've seen before, like really early nerdy people into it, like the people who were into the internet, back when it was ARPANET, like that category of stuff. It's really interesting and weird. And, people make fun of it and it's going to go to zero and all that, but the number of really smart people, not just random VCs, but particularly smart people that I know who believe it pretty passionately. It's different from drones. What do you make of this thing? Is it like what am I seeing?
Yeah. Well, I'm a personal investor in Bitcoin and through Coinbase and others. Mostly I like to get involved to understand this. As a fund, we haven't invested in any crypto or blockchain companies yet. And we don't have time to go into detail, but like blockchain doesn't necessarily mean crypto. Like it's there could be this new protocol that's going to make things safer and better and easier to transact with blockchain technology that are very interesting. We're looking a lot around digital assets. The CryptoKitties experiment was interesting to look at, and met the founders early. We're not investors in that, and whether it's a fad or something real, I don't know. Time will tell. But the idea of digital assets being on the blockchain is interesting. Maybe ticketing on the blockchain. I mean, blockchain technologies will be incorporated into consumer software, and there'll be opportunities for us to invest there. It's just the underlying protocols and the underlying technology are not settled yet, and so it's hard for us to invest in the application layer into the consumer software, the stuff that's people are going to use, right? Until the underlying technology is set, and that could be this year, it could be next year, it could be 3 years from now, but that's going to happen. Like I'm pretty convinced on the blockchain side. On the crypto side, when I heard it first, 2013. I thought this could be really cool, but also really dangerous, and and so
once again, by the way, not to interrupt, but the that same concept of like nobody's ever gonna
same
car.
Thing.
It was like cryptocurrency is what you use to buy drugs, and if you go buy some Bitcoin, the FBI might open a file on you.
That's right.
Was the idea
and people were. I mean, probably that was the majority of the use at the time, right? And so it doesn't mean that it's not going to scale, and everyone's going to use it, and it's going to be better than fiat or cash currency. But I think it's. I'm pretty convinced that it's here to stay. I don't know in what respect and how massive, but I think it's here to stay. And it's easier for me to say it now. Like Goldman Sachs just announced today they're going to be trading crypto, and probably because their customers were saying we got to do something here, Goldman, or we're going to leave. So like that's interesting. One thing that was very helpful for me to understand about crypto is if you use yourself as the marketing survey of one, that's very dangerous, because if you go outside the U.S.,
I've heard this from
and it's that's a really big insight, like where there are currencies that will be worth 50% less tomorrow. Well, when you have a more stable currency, even though to us it might look like crypto is crazy and Bitcoin's up and down, but relative to whatever cash currency they have in a third world country somewhere where it's going to be deflated 50% or 100% in a week, it looks pretty good, So, when you think about globally, it becomes a really interesting opportunity.
I'm also surprised that like when people talk about it, there's some basic economic concepts. There's nothing behind it. It's like, well, there's nothing behind a Monet painting. It's a bunch of paint that's not worth anything. But it's always been true that if everybody agrees that something is worth something, like gold has some uses, like industrial uses, but mostly everyone just agrees like gold is pretty cool. So absolutely you can just agree on something being valuable, and it can be valuable.
That's right.
So
I think that's right. And so it'll be interesting to see how this develops. We're going to be investing in crypto and blockchain probably this year.
Excellent.
If not, certainly by next year.
All right.
Yeah.
Well, thanks for doing this.
Thank you very much. Congrats on the success of your podcast.
Well, thank you very much. It's kind of crazy. I just started it, and all of a sudden, here I am 80 episodes later.
That's awesome.
So how do people get in touch with you if they want to follow you?
Yeah,
hear about your blog?
MavenVentures.com.
Great.
You can sign up for our blog.
They can find the blog there.
Yeah, you can find me on LinkedIn, Twitter. We're very out there on social media.
All right. Thanks so much.
Thank you.
This has been the Something Ventured podcast. I'm Kent Lindstrom. Talk to you next time.